Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and consider other important aspects of working for yourself, being self-employed, running a small business. So today we're going to talk about the things to consider if you are switching from for VAT from cash accounting to standard or accrual accounting or vice versa. Before I do that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information should you need to, as well as being able to find other information that we have available on a whole host of different topics, all aimed at supporting you in your self-employment. So back then to the topic today, which is transferring between cash accounting and standard or accrual accounting. So standard accrual accounting, both different words but mean the same thing. So you will remember from other videos that standard or accrual accounting is where the VAT is being accounted for at the point of the invoice being raised. That's both for sales invoices and purchase invoices. And cash accounting is at the point is accounted, VAT is accounted for at the point of payment, either receiving payment for a sales invoice or making the payment. And the other thing that's important to remember is that it's not necessarily the same basis that your general accounts, your profit and loss is based on. So you potentially are a sole trader who is using cash accounting for their profit and loss, but potentially you are using standard accounting for your general profit and loss, and cash accounting for your VAT. That is possible. And the reason that I mentioned that, I appreciate it causes a little bit of confusion, but it's really important that you think what is needed to be accounted for at what point, what are you trying to achieve. So today we're focusing on the VAT side and switching between the two schemes, because you can imagine if you are, for example, on standard accounting, then your VAT will be reported at the point of invoice. If you are now switching to cash accounting, it's important to make sure, if you imagine that you had, say for example, if you issued a sales invoice with VAT 6 months ago and you are on standard accounting, then you will have already have paid the VAT elements. You have already declared the liability for that transaction to HMRC in your VAT return when you were on standard accounting. If you now switch to cash accounting, and you need to be really careful, because of course, and then that customer then makes the payment, there is a danger that that is then going to be recorded again separately. So it's really important that you understand exactly what's happening and exactly what you need to be looking out for. So if you are VAT registered these days, it is most likely that you are going to be mandated for making tax digital. So there's a high chance that you are going to be already using software, submitting your VAT returns to HMRC. So the first thing that you need to be understanding is, if you are changing from cash accounting to standard accounting, then firstly you need to decide the date that you're going to do that. Now, it's most likely you won't need to report to HMRC that you are operating cash accounting or standard accounting. But even so, in the event that you have an inspection at a later date, it's really important that you can demonstrate to HMRC that no transactions have been duplicated and none have been excluded either. So firstly, you need to check in your software provider's guidance to see how the software is going to handle the change, and make sure that you completely understand before you do anything, the instructions. So some softwares you will need to actually change the settings at a specific point. You will need to take specific actions first, and it's really important that you follow those. For your own benefit, you should be making the change at the start of a VAT quarter period. So certainly you don't want to be changing sort of like mid-month. That'd be very difficult for the software to navigate. But also, if you change mid-quarter, then it's likely that your software won't be able to deal with that. And in any case, it would be really hard for you to be able to backtrack through to demonstrate that they've both been both sort of sides of the change have been accounted for correctly. So the first thing is choose the first day of a new quarter for the change. Make that decision in advance. And it's likely that what's going to need to happen is you're going to need to submit the VAT return to HMRC on the previous. So in this example, let's say that we're switching from standard accounting to cash accounting. So you're going to need to submit your VAT return for the quarter at which ends the standard accounting. And then at that point is likely when you would make the change to the settings. And different software will be different, but I would suggest for just for sort of to be equally sure on things, that any unpaid invoices that you perhaps hold back entering those until you've submitted the return and you've marked it filed in the software. Because obviously what there is a danger of, if a customer, for example, you issued a sales invoice 6 months ago when you were on standard accounting, and you will have likely to have submitted that on a return, so you've already declared that liability to HMRC through your software, will have pulled it from the actual invoice, and then you make the change, and then after that change your customer makes the payment. There's a danger, you can see now we're on cash accounting and we're declaring the liability at the point of payment. There's a danger that that actually does get flagged up again, and a duplicate liability is raised. So hopefully you can understand how that would happen. So the other things that I would suggest that you do, and say, as well as reading your the guidance in your from your software provider of how to handle it, is hold back some of the inputting potentially to be absolutely sure that it wasn't in the software at the point when you did your last standard accounting return. So therefore it can't have been captured, it can't have been duplicated. So that is one that's not always going to be practical, depending on how the volume and how long your customers take to pay, how long you take to pay your suppliers, and how often you're referring to your accounts. That may just not be practical. So the really important thing is to make sure that you take a snapshot report and have a clear understanding at the point of the change which customers owed you money still, which invoices had been raised and not paid, and which purchases had been included and not paid. So you need to have that real sort of clear understanding at the point that you make the change. What are your outstanding debtors and creditors that have already been reported to HMRC? And then just take the time to keep a note of that record, and at the point that those payments are received, then make sure that they are not being duplicated, and that the next time you do a VAT return, that those transactions aren't being reported again. So hopefully this helps you to just sort of understand that it's really important that you understand exactly what your software is doing, exactly what has been reported, exactly what the change of from cash accounting to standard accounting means for your VAT liability, that you have a real clear understanding of how your software is going to handle the change and whether there's anything that you might need to do manually, but also to keep an accurate record at the point when you submit your final standard accounting in the scenario where we're switching to cash accounting. But it also works the same the other way, to just have a detailed report of your debtors and your creditors at the point that you make the change, understand what's already been reported and what needs to happen going forward, to make sure that there's no duplication or gaps. So there's obviously a real danger of that happening. So if you obviously are struggling to facilitate the change, then you can contact the support for your provider, or of course you could engage professional help to help you to undertake that change. And that's, you know, there's lots of reasons why you may make the change from standard accounting to cash accounting, or vice versa. And as I say, specifically I'm talking about VAT, but we'll cover if you're switching for your general accounts for your profit and loss preparation in a different video. Thank you very much for watching. Goodbye.